Alright guys, welcome back to this channel. Stay with me as I take you on this beautiful trade that has already played out. Alright, this is the last trade for the month for me and the last trade for the year also, because the year has come to an end and the big banks are not in the market anymore. Alright, you can see from your trading view, from your chart personally, that the market is really consolidating in this period. Alright, the smart money, the financial institutions, alright, the big banks has taken profits. Alright, they have left the markets. Now they will be like in the Hawaii flexing. Alright, flexing. So this is the time for you to go spend time with your family and go have fun. Right, go have fun and pay yourself for working throughout this year, from the beginning, from January to till December. Alright, this is the time for you to go pay yourself. Alright, go have some fun, take time, spend time with family, and also don't forget to read your books. Alright, read your trading books and also study trading so that you won't forget how to analyze the chart or forget how to control your emotions while trading. Alright, so you can still stay refreshed. Alright, when you come trading by next year, alright, you can still be refreshed about the charts, about the trading industry entirely. Alright, so stay with me as I take you on the thought process on how I entered for this, my last trade for the year and for the month. Alright, as you can see, it was a beautiful trade right here, played out perfectly well, but I'm going to take it out so I can explain it better for you. Alright, quickly. Now let's go down to the higher time frame. Let's start from the higher time frame first to analyze from the higher time frame so that you can see something clearly. Alright, from the higher time frame you can see clearly that the market is bullish. Alright, let me zoom in so you can see this properly. You can see that the market is bullish from this point. Alright, from this angle. This is the 1 hour time frame. You can see that the market is bullish. There is this external high right here. Price broke past this external high at this point. Let me draw that out right here. Price broke past this external high at this point. Alright, so the market is bullish. Alright, the market is bullish. So at this point I saw something. While the market was bullish, I saw something right here at this point. Price broke structure, retraced, and gave us this huge bullish engulfing candlestick. Can you see this? I think this is like a news or something. This huge bullish engulfing candlestick at this point, and price broke structure again to the upside. Right here, price broke structure again to the upside at this point. So what am I expecting? As price got to this place, giving me this small bullish candlestick, small bullish candlestick, small bullish candlestick, small bullish candlestick. I knew for a fact that price is about to retrace. Alright, price can't go up in a straight line just like this. It can't happen. Alright, price will always retrace. Alright, go up, give us a continuation and an impulsive move, a continuation, impulsive move. That is what makes up a trend. Alright, that is what makes up a trend. So at this point I knew for a fact that price is about to retrace, but I don't know where price will retrace from until I went to the lower time frame. Alright, let's go down to the lower time frame. Alright, so this was it at this point. Like I said, the external breakout structure, which is right here, and now another breakout structure after this bullish engulfing move, this bullish move. I think this is the smart money entering for the trade at this point. Alright, this is a huge liquidity at this point. So there's a fair value gap here definitely, and I know for a fact that price will come to fuel this fair value gap. Alright, at least at the middle of the fair value gap. Alright, if you're watching me for the first time, always do these things, but if you have been watching me, you should know that I've been saying these things right from time. Alright, if you want to set your take profits, place it at that fair value gap, at least at the middle of that fair value gap. Alright, price will always come testing that point before continuation. Alright, so don't forget this. So this was what I saw that made me enter for the trade at this point. Like I said, I won't know when price will retrace on the higher time frame until I go down to the lower time frame. Now I am on the 15-minute time frame and I'm seeing this clearly at this point right here. Price give us higher low and a higher high at this point, and the shift of structure right here. So I had this shift of structure at this point, and immediately this shift of structure, I saw a retracement, which is a pullback. All right, at this point, you can also take out your premium and discounts from this high down to the low. You see that price is at our premium. All right, price has gotten to our premium. So after retracement, I entered. Immediately I saw at least 3 candlesticks or one huge engulfing candlestick for your confirmation. All right, if you want to enter for a particular trade after a retracement, wait for a confirmation like a huge candlestick, a huge engulfing candlestick, or 3 candlesticks closing below each other. All right, so at this point I had that 3 candlesticks closing below each other, so I entered for the trade immediately at this point, and my stop loss was right above this high, yeah, right there, and my take profit was just at this point, somewhere, I think somewhere here, yeah, somewhere here, because something happened on this trade. All right, price almost got to my take profit firstly as price was trading downward, but something happened. All right, look at what happened at this point. The market was retracing. So as the market is retracing, 2 things will happen. It's either that price will retrace because there's like a break of structure to the downside at this point. I don't know if you are seeing this. There's a break of structure right here to the downside to continue the pullback. All right, if you go down to the lower time frame, you see that this is also a downtrend to facilitate the pullback and also to fuel the fair value gap. All right, so there's a break of structure right here to the downside, and I moved my stop loss to break even because I know that it's either price is coming to stop me out or price is just coming to retrace after this break of structure right here. Because after price break structure, price is supposed to retrace before continue going down. All right, so it's either this is a retracement or this is coming to stop me out. So I just move my stop loss to break even at this point. I move my stop loss to break even, and I just allow the trade play out. And as you can see, it was a beautiful trade. All right, it was a beautiful trade. So this is the first trade. Now let me show you the second trade. All right guys, this was the trade. This was the second trade I entered at this point. I call this the craziest trade for the year. I call this the craziest trade for the year because this is like insane entry at this point. The first one was like a scalp entry, and the second one was like an intraday, and also the third one is a huge swing trade, guys. As you can see, the last one is still running to my take profit. All right, like I said, this is my last trade for the year. I'm just going to let this trade just play out on its own because I'm already setting the trade on break even. All right, my stop loss is already on break even, so I'm just going to let the trade play out. All right, 2 things will still happen because in the market it's always 50-50. It's either price comes back to stop me out or price hits my take profits. All right, so either these two, one thing must happen. All right, so I just let the trade play out on its own. All right, so let me show you how I entered for this trade quickly. Let me first of all take it out. Let me show you how I entered for the trade quickly at this point. Gotta give me some time, man. All right, so this was what I saw that made me enter for this beautiful trade. All right, you can see that the market is bullish. All right, if I should go to the higher time frame, you see that the market is bullish. All right, but you can also see it from here that the market is bullish. All right, market is bullish. This is a retracement and this is the continuation. All right, so I want to trade with the trend. Remember, the market is bullish and I want to trade with the trend. Sometimes I do counter trade, but most times I always like trading with the trend, all right, because that is when you have a lot of potentials for price to hit your take profits, all right, because you are trading with the trend. Okay, so at this point I saw something right here. At this point, as price was going up, trading up, because I know for a fact that price is coming to break this high at this point because the market is bullish. All right, this is a retracement after this bullish movement, this huge bullish movement. After this huge bullish movement at this point, let me show you this clearly. So after this huge bullish movement right here, after this huge bullish movement, price is now coming to retrace at this point. Give me some time. So after this huge bullish movement, price is pulling back right here. Price is pulling back right here. So after this pullback, I knew that price is going to break above this high. Let's let me mark that out. Above this high right here. I knew for a fact that price is coming to break that high, and also I was targeting one particular high on the higher time frame. I think it was this high. Let me show you something from the higher time frame. All right, quickly. All right, guys, we are on the higher time frame. All right, this is the 4-hour time frame at this point. This is the 4-hour time frame. So this was where I set that last take profits at this fair value gap. You can see this clearly. You can see this fair value gap at this point. So I placed my take profit at this point. My last take profit that has not hit TP yet. I told you guys that it's still running to TP. All right. So this was what I saw in the higher time frame. You can see that the higher time frame is also bullish. So you see me trading the bullishness. I am right. All right. I am right by trading the bullishness. All right. That is why the trade played out, because I'm trading with the trend, and I have the mind and I have a lot of confidence to set my take profit at a higher level. All right, at a higher level, looking at the higher time frame, because I know that the market is bullish, the lower time frame is bullish, the higher time frame is also bullish. So I have the confidence to enter for even 3 trades. Even 3 trades, I entered for 3 trades, and 2 has played out, remaining 1. All right, so you see that I have more confidence trading with the trend. All right, if I'm trading counter trend, I will just place one particular trade and just let it play out, because I know that I won't predict the market to know when the market will retrace from or continue going up from. All right, if price is in an uptrend and I want to trade a counter trend, I will be trading downtrend, that is trading against the trend. For those of you that do not know what counter trend means, if I'm counter trading, then I'm trading against the trend. All right, get this and get this clear. So if I'm trading against the trend, I'm trading and taking profits immediately and getting out of the trade, because price can retrace and continue going with the trend. All right, if it's an uptrend, price will continue going up. If it's a downtrend, price will continue going down. All right, so you enter for the trade and get out immediately, because you don't know where price will start retracing from. All right, so now I'm trading with the trend, so there's nothing to worry about. All right, and all these points that I drew out from the higher time frame are valid. I knew for a fact that price is coming to break the structure, because let's look at this from the down point where price was trading from, where the market is coming from. You see that there's a break of structure right here. This is the higher time frame. You will see something now. There's a break of structure at this point now. Yeah, right here, the same thing. There's a break of structure at this point to the upside. Can you see this? To the upside. Now, after this break of structure, price got to this point, and now price retraced down to this point. Right, let me take all this out so you won't be confused. Price retraced down to this point. Now price has continued going up again. All right, as price is going up, there's a breakout structure here also. I traded all this. I entered for all this trade. There was a trade I entered for, I think at this point, when I saw some breakup, when I saw some change of character down this point, I entered for a trade. I think I showed you guys. So we had that internal breakup structure. Now I'm waiting for the external breakup structure, which is right here, which is the main breakup structure from the higher time frame. All right, so I'm trading to that point, and that is where my last take profit is resting. All right, so now let's go down to the lower time frame again. Let me show you how I entered for the trade. All right, now we are on the lower time frame. Now this was where price was at. Particularly, price was right here when I entered for the trade. Price was at this point. All right, let me show you what I saw that made me enter for the trade from that point. Remember, price is turning bullish to break this high here and break the external high from the higher time frame, like I have showed you guys on the higher time frame. All right, so price was at this point when I entered the trade. So this was what happened right here. This was what I did before I entered for the trade at this point. So yeah, right here. Remember, we are on the lower time frame. All right, so on the lower time frame, we are saying a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and a higher high at this point. All right, and price pulled back. Now this is where a lot of retail traders get it wrong. A lot of retail traders will be thinking this is a breakout structure or a shift of structure. Sorry, they'll be thinking this is a shift of structure or a change of character at this point, and they will be trying to sell in the market without looking at the higher time frame. This is what I keep saying. If you want to analyze the chart, start from the higher time frame. All right, from what I'm saying or from what I have showed you guys, you can see clearly that the higher time frame is bullish. The higher time frame is bullish, so as the lower time frame. So why are you selling? Why are you selling? Why are you selling? If I can remember clearly, price has not broke past this high yet. So all these are just internal structure. All right, price giving us this higher high, higher low is internal structure, is internal trend. All right, don't think that price will turn bearish just because you saw this little breakup structure at this point. It doesn't work like that. All right, so you have to start analyzing your chart from the higher time frame, so you see what the market is up to. All right, so you see what the market is up to. Most of the times price do something like this. Let me try to give you an example. Price do normally do something like this. Price do normally do something like this, come down to this point and continue going up. Price do normally do something like this. I don't know if a lot of you guys have seen something like this. I know my drawing might not be perfect, but I'm trying to explain something here. All right, price, I have seen price doing something like this multiple times. All right, you see that price will keep trending up on a straight line, then immediately you see this huge pullback at this point. It's just retracing to a demand zone. So if you are trading like the retail traders, you will keep buying. You will keep buying in the market without knowing that this is going to be a huge retracement at this point. Or when you see something like this, or when you see a price retracing like this, you might think that this is a breakout structure at this point. Let me show you something. Stay with me. I want to show you something quickly. At this point, you will think that this is a shift of character, and you will be trying to sell immediately price got to this point. You will be trying to sell, but you should not be selling. All right, you should not be selling. You are supposed to buy from this point and buy it to the moon. All right, you are not supposed to be selling because price just retrace to facilitate a demand zone. All right, there can be a fair value gap here at this point that price is coming to forward. So get this and get this clear. Anytime you see something like this, most times it is not a change of character. The price is going to turn bearish. All right, because from the higher time frame you can see that the market is bullish. So why are you selling in the market? Why are you selling? You're supposed to be buying. All right, the market is bullish. So this is what I do see most times, and I'm used to it. All right, so get this and get this clear. Now let me continue with the analysis at this point. So like I said, this is not a change of character at this point, so you should not be selling. All right, so I waited clearly. After this pullback at this point, I saw this shift of character right here, or shift of structure, whatever you want to call it, a shift of structure or a change of character at this point. And I wait for that pullback. All right, I wait for the pullback. If you can check clearly, you will see that there's like a fair value gap, a mini fair value gap at this point. Fair value gap at this point. And secondly, price traded up, failed to break past and retraced. So this is like a flip zone at this point. It's like a flip zone at this point. Flip zone right here. So I waited for price to come sweeping liquidity below this flip zone. All right, so immediately I had that liquidity sweep, and also price is at my discount. I entered for the trade. Immediately I saw this engulfing candlestick right here. So I placed my buy order firstly at this point. I entered for the buy, and my stop loss was right below this point. And my first take profit was at this high right here. Guys, I saw this high and I spotted it out at this point. Yeah, right there. Right here was my first take profit. Right there. And my second take profit, remember I entered for this trade 3 times. My second take profit was right here. I entered at the same spot. Alright, I entered at the same spot. My stop loss at the same spot, and my take profit at the second high. Like I said, that's other high that I drew from the higher time frame, this high here, because I knew that price is coming to break above this high. All right, and there's another high on the higher time frame. That's all. Sorry about that, guys, my camera just went off, but I'm back again. All right, I'm back again. So at this point, like I said, there was another high, or there is another high on the higher time frame that I showed you guys. All right, so my second take profit was at this point, at this high here, and this high, because I know for a fact that price is coming to break above this high. All right, so my second take profit was right at this high here, and my third take profit, which is the last take profit, I entered at the same spot also. Right at this point, entered at the same spot right there, and stop loss at the same spot also. And I was targeting that higher time frame that I showed you guys. So price has not mitigated it yet, which was right here at this point. So this was it. Price has not mitigated this last trade yet. So like I said, 2 things will happen. It's either that price goes up and hits my take profits, or price will come back and stop me out at break even. All right, remember when the price was moving to my direction, I did something. Firstly, I could not immediately set this my first stop loss to break even, because price immediately hit my TP. So I was not quick enough to move it to break even, but it's all right because price has already hit my TP. But I moved the second this second trade to break even, and also this third trade to break even. So now the second trade has hit TP at this point, and now we are still on the last, which is the third trade, which is still running to my take profit. So now I am on zero risk. All right, I'm on zero risk. I'm not risking anything. So it's either price hit my TP or comes back and hits my break even, or stop me out at break even. All right, I'll still not lose anything. I will get out with like a little profit. All right, so that's is what I'm waiting for. Right, I'm waiting for this trade to play out. So I hope you have understand something with this video. I hope you have gained clarity on how to place that beautiful trade, all right, and how to analyze your charts. All right, so I think I have something to share also. Okay, like at this point, like I showed you guys, when you see something like this, don't immediately think that this is a shift of structure, that price is now going to turn bearish, something like this. You knew on your mind, you knew for a fact that this is a fair value gap at this point. So price pulling back is price coming back to fill this fair value gap, at least at the middle of the fair value gap. Price is pulling back to this point. So you will not think that this is a change of character, that price is going to turn bearish. I know price is going to turn bearish for a short period of time to facilitate the pullback. That's just it. Price is going to turn bearish to facilitate the pullback on or in a short period of time, and price will continue going up. All right, so if you are counter trading and you want to trade something like this, you should be skeptical about the market and set your take profit at a close range. All right, because you never ever know where the market will retrace and continue going up from. All right, so get this and get this clear. This is what I was trying to explain for you guys at the first time. All right, so don't see this and say that, oh, this is a change of character, price is about to turn bearish, and go to the higher time frame and take profits on some sort of like a low here. You take profit at this low and you enter for the sell from this point because you think that price is going to turn bullish. Price is going to turn bearish, and you enter for the trade and you target this point. You are going to lose, man. Let me say you do something like this, because this is what a lot of retail traders do. You think that this is now a change of character, so price is going to turn bearish from this point. So you now set your take profit at this point. You now set your take profit at this point. Then let me say you entered from this point. Immediately price retraced. You entered for the trade and you place your stop loss at this point, because if you place your stop loss here, it will be too big. All right, so you place your stop loss at this point, and you're thinking that price is coming to this point to retrace or continue going down, like price is about to turn bearish, without you knowing that this is just a little pullback for a short period of time. So don't get this misquoted or don't get this misunderstood. All right, so if you do this, this is what will happen to you. You get stopped out. All right, so don't do this. All right, rather trade like the big banks. All right, trade like Sammy Trade, trade like the Smart Money, trade like the financial institutions, man. All right, don't trade like the 99% who fail in trading. All right, so this is it, guys. I hope you have understand something from this video. Now let me go to the higher time frame. Like, yeah, no need to go to the higher time frame. I think you can see this clearly from here. So this was the point I was targeting from the higher time frame, right here. Right here. Let me go. Yeah, let me go to the higher time frame. Let me show you something quickly. All right. So this is the higher time frame. So this, remember, I've showed you guys this before, so you should remember. All right. This is the higher time frame, and this is what it looks like. This was where I placed my last TP right here. So this is what it looks like. Can you see this? So this is it, guys. First TP, second, and last. So you see, price is still going to my take profits. So you see that I still have like 80%. I think 80% believe that the market will still go to my take profit, my last take profit, because looking at this from the higher time frame, you see that price was bullish and bearish and broke structure to the upside, giving us higher high, and bearish again, giving us a higher low. So now this is a higher low, meaning that price is going to give us another higher high, breaking this high here. And also, good thing guys, good news, there is a fair value gap here. Price will come to this fair value gap and break this high, giving us another higher high, because the market is bullish. Alright, the market is bullish. So this is what gave me the confidence to enter for this trade and place my take profit at this high here. So I didn't place my take profits randomly. Alright, I did that because I saw something. I did it because I saw something. So this was the trade, and this is my last trade for the year. Now, let me give you guys a little tip. For those of you that have been trading, alright, for those of you that have been trading for the whole of this year, alright, you have been working your ass off for like since January, February, March, and so on and so forth. You have been working your ass off from January till December. This is the time for you to relax, man. This is the time for you to relax and spend some time with your family, like I said. Alright, and spend some time with your family. Now, if you are a beginner, you started mastering trading for like few months, few weeks, and you don't want to be left, you don't want to forget things about trading. You don't want to like clear your head and just start having fun and come back to the chat and don't know what to do anymore. You don't want that for yourself. So all you will do is that keep in touch. All right, keep in touch. You can do that by studying, go have fun. Yes, when you come back, you also look at your charts and see what the market is doing, and also read your trading books. All right, read your trading books like I have listed before. You can get your Think Like a Monk. You can also get your Trading in the Zone. You can also get the Disciplined Trader and the 10 Essential Rules of Forex Trading. You can get these books, all right, and just keep reading them, and also read and think. Like I said, read and think. All right, so why I said you should read and think, because you make money from forex trading. Definitely you will make money from trading forex, but how you handle those money matters a lot. All right, how you manage and handle those money matters a lot. So you read and you think, and you read on how to manage finance. All right, that is the most important thing, which is not being taught in school. All right, they don't teach it in school. You don't get this information from school. You get it from people like us. All right, people like Sammy Trade, you get it from us. So they don't teach you this in school. Like I said, learn on how to manage money, learn money management. All right, this will help you a lot, because when you are making money from trading, you are supposed to be investing the money on something, all right, that can be giving you a passive income. So you don't need to be present on that day or in that place for you to make money. So make money from trading, invest your money somewhere, so you don't also put your mind focused on trading. Because if you are focused on trading is the only thing you do, you don't have other side hustle, you will be distracted, right? You want to like, you'll be wanting to meet up every single day trying to make money from the market, and you know that the market will not always give you money. So if you are forcing the market to give you money, the market will take more money from you. All right, so if you have side hustles, you won't be looking at the market all the time. You will just come few time and just trade and just do your business outside trading also. All right, so this is the advice I have for you guys. Go have fun with your family, take a deep rest. All right, have good sleep, have good meal. All right, eat properly. I know you might be doing you might be having diet from January till December. Most people do that, because I do it also. All right, I go on diet so I don't gain much weight. All right, I do that also. So I don't know if you guys also do it. So if you have been doing it from January, this is the time for you to like have fun a little bit. All right, eat good food. All right, spend time with your family, be happy. All right, and also keep in touch with trading, keep in touch with your charts. All right, don't be disconnected, keep in touch with trading. All right, so that's it for today, and happy trading day. and happy trading week.